Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
If you're interested in learning more about setting up your own family banking system, send an email to thefamilybankingshow@gmail.com. We'd love to hear from you.
Welcome back, ladies and gentlemen, to the Family Banking Show. We are your hosts, Derek, Rob, and John. Guys, how are you this wonderful August day?
Yep, summer's flying. We mentioned this last week, but yeah, it's going to be over before we know it. Shoot.
Yeah, yesterday we had, did y'all have this as well? The National Night Out?
Yeah.
Okay.
Yep.
That's a new concept to me in
Yeah.
Texas. It's very uncommon. Apparently it happens in some neighborhoods, but
Yeah.
we have a super tight-knit block, and there's a woman who's lived in the same house for 48 years, right across the street from me, and she organizes it, and she's very energetic about it. She's playing life at a very energetic level in her 80s. And
That's awesome.
so that's been fun to, we got to connect with all our neighbors yesterday and see the kids running around. My daughter, she has super curly hair, and she was playing with this other kid's train that, like, if you like wind it up
Oh,
and then
yeah.
let it go, it'll like start spinning. And
Mm-hmm.
literally 6 times last night, it got like caught in her hair, and she's just like, like, I need help.
Wow. And she didn't start crying? That's amazing.
No, literally we had to get like scissors, and it was a whole thing. But
Ooh, wow.
fun little memories there, and
Yeah.
glad we got to do that with our neighbors.
Yeah.
We had literally had the same thing. We had new neighbors move in next door to us, and they are like go-getters. They just they've been here for we've been here for like 5 years, and we got to know like our neighbors on the right to left of us. They've been here for like 2 months, and they've like rallied up 20 different neighbors to come to their house. They're amazing. Yeah, so
Social
what they do is
butterfly.
that they just take the kids out on their, go for a walk, and any breathing person they go up and say hi to, right? So they should be there, and it's great. I'm really appreciative of them because I got to meet all these neighbors that I didn't even know we had, and there's a lot of kids in the neighborhood, and here's a pro tip for you guys with young kids: go to Facebook Marketplace and buy the bouncy houses on sale. So they had like a bouncy house, and they had a water slide bouncy house,
Wow,
and
that's the
it
real deal.
was yeah, in the front yard. They had the police. The police stopped by, and all the kids got to sit in the cop car, and
Yeah,
and
Cool.
it was fun.
yeah, we
Yeah.
had the canine unit
Uh-huh.
come, and then the
Yeah.
horse, I don't know what you call them, the
Are you
horse
serious?
Like
unit.
Corey.
Yeah, that's
So
awesome.
yeah, that was a blast.
That's
Wow.
cool. Yeah, living further north in the country. I don't think anybody did that last night, but I could be wrong, but I've seen it
People living,
before, and I think Minnesota does it really, really well.
Mhm.
yeah,
A lot of
maybe people live kind of in your area with more space, so they don't have to do the math.
yeah. Yeah, community
Yeah.
looks a little different. Yeah.
Yeah.
But no, it really is. I'm happy that our neighbors are that outgoing because I appreciate meeting our neighbors, and it does. And now he even started a group chat, so yeah, hey, our dog needs to be let out. Is anyone home? And so stuff like that. That like yeah, that's what community is about, right? I
hmm
appreciate them.
hmm Yeah.
Nice.
Well, glad to hear it, guys. And hopefully our listeners are enjoying their summer months as well. And I know some people are already starting to think about school ramping up, which is unfortunate for all the kids. I know that, well, some of them might be excited, but I know when I was a kid, it's like, oh no, summer's coming to an end.
Yeah.
Yeah, guys. Hey, in this episode, we're going to be talking about IBC for businesses. How do you practice the infinite banking concept as a business? And we're going to look at, I guess, a little case study, some theoreticals, examples here of what this could look like potentially. And of course, you have to use your imagination when we look at these case studies and think about how could this apply to me or to my business. So guys, I'm going to go ahead and share my screen. And then at any point that you guys want to chime in and voice your thoughts, you just let me know, okay?
Sounds good.
All right. So this is coming from a presentation that I gave to a room of entrepreneurs, and tried to give an example of somebody who was fairly new in business and was looking to grow and expand their business. So here's a story about a guy named Marcus who's going into his third year of business, and this is really, the first year that he's planning to be profitable. And starting small, he's got 25,000 in profits, but he feels pretty confident that he could continue to grow that from year to year, or at least maintain that level. And so what we're going to do is look at a way that he's going to use his profits, the 25,000, to start his own infinite banking policy to grow his equipment fleet. This guy's in the construction industry and he needs more equipment to continue to scale. So we'll see here that his premium is going to be $25,000 a year. And you can see the associated dividends, cash value, and the death benefit that goes with it here. And we're going to continue that 25,000 at least, for 15 years, if not longer. Ideally, he's in business for more than 15 years and his profits continue to increase and he can expand his business and the policies in place as his business scales. Okay, so pretty cookie cutter stuff. This is very typical illustration type material that you would receive from working with us. So how does this work? Marcus realizes that he's got a cash flow problem in year 2 of his policy. And so he's going to utilize the cash value of his policy as a line of credit to help smooth out his cash flow. Okay, that's the first example we're going to look at here. So how does this work? Normally, if he had a bank line of credit, he might be paying, in this example, I just figured 9.5% interest for a line of credit from the bank. And that may be high, maybe low. My assumption is that's kind of low, or at least competitive rates of what people might be seeing nowadays. And so for that $10,000 line of interest or line of credit from the bank, he's going to pay that back in the course of the year, but there is still going to be some interest charges with that. And so he would have paid $600, let's say, in interest to the bank, just by having the rights to use that $10,000 line of credit. Okay.
Mhm.
But notice here that, hey, there are some months where he's not making any payments here in yellow. There are some months where he's drawing against that line of credit, additionally above the first $10,000. And this is what you can do with an IBC policy as well. It works the same way. If he needs additional capital or for one given month, and he's got the cash value there to utilize, he can still use this as like the alternative to this line of credit. Well, what's next? He's going to take out a term loan, a 5-year note to finance whatever he needed. I'm not sure what it might be, but let's just stick with these numbers of $10,000 over 5 years at 9% interest. His monthly payment was $207.58. The total interest that he paid to the bank was $24.55. It's a lot of interest in 5 years. But he's going to use his banking system now, and the life insurance company was charging 5%. His monthly payment, though, is going to stay the same. But the interest that he was paying to the insurance company was now $1,322, and he's recaptured $1,132. Okay? That interest that he recaptured is then going to become additional paid up additions and is going to add capital and efficiency to his infinite banking policy. Okay, so we've looked at 2 examples so far, the line of credit and now a term loan.
Okay. And then in this particular example, he got he got a policy designed by us. So it has paid up additions headroom, so to speak. So he can, take that difference that he's gaining from the wholesale interest rate that he's getting charged from the insurance company, and he's taking that and he's purchasing more insurance via paid up additions.
Yeah.
So he's taking that difference and putting it to work back into his policy.
His cash flow has not changed. He's just changing who he's paying interest to and recapturing interest from what he would have been paying to a third-party bank.
Yep.
Okay.
Got it.
So those two examples so far, line of credit, now the term loan, and now he's ready to do his first equipment purchase. He's going to purchase this skid steer, which retails for about $55,000. He's going to do this in year 3 of his policy. And for equipment financing, we're going to assume a 9% interest rate over 48 months. And if he were to finance that through a traditional bank, the volume of interest would be almost 20% volume of interest. But with his banking policy, it's now down to about 10 or 10.5%. And he's going to recapture $4,896 over that 4-year time frame. The true cost of his banking system. He would have paid the principal, $55,000, back into his own pocket, if you will. It's coming out of his left pocket, his operating cost for his business, and it's going into his IBC policy. He's just he's moving dollars from one pocket to the next, but he's getting full access to that principal again and again.
Yep.
Total interest that he would have paid to the insurance company, $5,797. The interest and dividend growth on the amount that he recaptured by the time he's done financing this Kubota is $5,147.
5,147.
5,147.
Yep.
Okay. So my question would be is how much did this machine really cost him? What is the true dollar amount that he's never going to see again? And that's a true cost. That's a real cost. And I want to put forward to you guys that it really only cost him about $650. Where did I get that number from? Well, that's the difference here between the interest that he paid to the insurance company and the interest and dividend growth on the interest that he recaptured is $650. Because he's retained all of that principal. It's going back into his policy for him to use again and again. It's never lost. It's always being recirculated.
Right.
So pretty good deal. A $55,000 piece of equipment, and his really true cost, the dollar amount that he will never see again, was $650.
Yeah, and that, like one of the first, playing devil's advocate, someone say, well, it's just because he's getting a better rate, interest rate on his policy.
Yeah.
And that's true. He is. But the next question is, well, where can you get that interest rate, Mr. Consumer without a policy? Like, where are you going to get that deal from a bank? So yeah, we agree. You're making the gain there because of the interest you're saving. That's step one. But then step two, you now have an infinite banking policy that you can then take that savings, pour back into the policy, and start gaining gains on that savings.
Right.
And then you can keep on reusing the dollars.
Yep.
And so for a devil's advocate out there, it's like, yeah, you're right. The main reason why you're getting this big difference is because of the massive amount of interest you're saving. But you have that option because you have a policy that's set up with an infinite banking style that you can then keep recycling dollars through. If you don't have one of those policies, then good luck.
Yeah, I think.
Go ahead, John.
And you're showing it right here, actually, on the slide. That is, well, if you could pull up the slide again, like one of the things that you never ever see when you're getting a bank loan, when you're paying cash for these equipment, pieces of equipment, whatever it may be, is that you have this added kicker of like a 7-figure death benefit
Right.
that is non-existent in any other form of starting a business, right? You're starting with a win in like guaranteed.
Yep.
Not to mention if Marcus goes through, seasons of maybe his business is seasonal, he has the full control of when and how he repays that loan. He can subject himself to the $207 a month, or he can say, I'll do $500 a month for 6 months and, $100 a month for the remaining 6 months. He's the banker, that's the power of it. And the peace of mind and the control that you have that literally exists nowhere else. Unless truly you run your own bank, I suppose, and you're also running a construction company. But even there, you're subjecting yourself to some other, outside entities that have an interest in what you're doing. So this is completely, private,
Mhm.
independent, and controlled.
Yeah.
And the other thing too, John, to add to that is with his policy, he didn't have to jump through hoops to explain to the bank why he needed the Kubota. He
Yeah.
just picked up the phone and called them and said, "Send me $55,000." And they said, "Where do you want it?" They don't care. So that's another thing. So you don't have to beg for your dollars, because you have your own banking system. You can just go to your own system. And so and you're instantly protected by the death benefit,
Mhm.
your family, and you get to keep recycling those dollars, and you're getting a better rate than you'd have got. Like, why wouldn't you see? This is what we do every week. I say, why wouldn't you do it? Why would you not do that?
So let's look at some of the long-term implications here. So on the top of the screen, this was the cash value of his policy after he has taken out the line of credit and the term loan in years 1 and 2. Okay. This is the cash value after he's financed his Kubota and recaptured the interest. So his cash value in year 10 is a difference of $6,138 just by changing who collects the interest payment and
Mhm.
the growth of the interest that he's recaptured because of the policy itself. Okay, so just by changing one thing, who's getting paid, he's actually building wealth and building resources and an asset in his business.
Yeah,
Okay,
it's
same
awesome.
goes in year 15. Now that number's, a difference of over $7,000. So let's look at this thing on steroids, turn on the afterburners. So year 3, we looked at him financing this Kubota. Year 4, now he's going to finance a backhoe. And then year 6 is going to be a fairly large purchase for him, financing his first excavator.
Hmm.
And just imagine here what this would mean for a business owner that he's been able to scale up, add more equipment to his fleet, service more projects in 3-year time frame. Like that's pretty incredible, the amount of growth in additional income that his business would be earning by
Hmm.
having these assets, having this equipment. Okay. So
Yeah.
what's the numbers look like? Well, the total that he paid was 247,388, but he's retained 220,000, almost 221,000 of his principal. The total interest paid to the insurance company, 26,500. The total interest that he's recaptured, 22,286. But by the time that he's done financing these 3 pieces of equipment, the interest and dividend growth in that year would make this 22,286 of the interest he recaptured would grow to 27,403. Pretty incredible to see that amount of growth in a 4-year time frame. So once again, before he financed any of equipment, his cash value in year 10 was, let's just call it 258,000.
Hmm.
But now that he's financed those 3 pieces of equipment, his cash value is now up to 285,401, which was a difference of that 27,403. And his death benefit has increased all along the way. The dividends continue to get better, and his policy becomes more efficient over time. Just by storing his profits rather than in a savings account, he's stored his profits inside of an infinite banking type policy. He's financed all the needs that he has for his business, smoothed out his cash flow, and added more equipment to his fleet. And he's building wealth by doing it. I want to go back just real quickly here and show the potential. Look at this. The amount of interest that he paid to the insurance company was 26,488. But it's being it is being completely offset by the interest and dividend growth of the interest that he recaptured, the 27,403.
Yeah.
So in some weird roundabout way, if you can think about it this way, it's like he's actually getting paid. He's building wealth by financing his equipment, which is kind of mind-blowing to think of it.
That's the banking process. Banking is a profitable business to be in, right? He's not, we gotta call a spade, right? He's not only in the construction business. He's
Right.
in two businesses, excuse me, simultaneously, right? He's the banker and he's in the construction business, and getting paid, in this sense to have these pieces of equipment is essentially getting paid to be the banker, right? And paying himself. And very important that throughout this whole process, nowhere did he just stop repaying himself. Nowhere did he just not become the honest banker that we encourage everyone to be. And so he's just getting rewarded for the for the business that he started, right? He had the patience and the discipline to capitalize, and then it just takes off. Like you could see it, especially after year 10, 15. It is unbelievable to see what these policies can do, what control you have. And then at that point, you're gaining profits from two simultaneous businesses.
Yeah, yeah, that's a great, a great way to state that, John, because it's just he's got the discipline to be an honest banker, to take those dollars. So he's getting an advantage from the difference in the interest rate. He's taking that difference and he's pouring it back into his policy. He has that discipline to be an honest banker. And so when you take that function back and you remove the middleman, the banker, you get to reap the benefits of that. Where if he would have been just taking it out of just paying his bank loans, he'd have been being charged higher interest, and that was just his one mechanism for financing, then he doesn't have all these other benefits that he could have been accessing at the same time. And it's really just a way to change your thinking and recognize you have this policy that you can utilize for all of these things, and you're protecting your family at the same time. It really, it's so compelling when you see it like laid out like you did, Derek. Like so super, super good job with that. That was excellent.
Yeah, and I think, the stark reality of being a small business owner is if he's only showing $25,000 in profits after, 2 or 3 years being in business, even the likelihood of him getting the lines of credit at
Right.
9% or financing this equipment at 9% is pretty unlikely, in my opinion.
Yeah.
This small business loans from the SBA, are probably near 12 or 13% right now. And so just imagine if I would have shown an example like that, how much this would have done even above and beyond what we have just looked at. Um, and he didn't have to answer to any banker. He didn't have to
Hmm.
show tax returns. He didn't have to show any of his books to somebody else to analyze and decipher what's going on there. But he did have to be an honest banker, like you were talking about, John. And he did
Hmm.
have to recognize that if I choose not to be an honest banker, he's going to ruin the best business that he's in, which is the banking business.
Right. Yeah, I think that's just such a key component that we're trying to educate our viewers and listeners on is the assumptions that people make. Well, I can just go to a bank and get a loan. Well, no, you can't assume that. You might not be able to get a loan. That phrase that banks like to hand out umbrellas when it's sunny, like they don't want if things are tough, you might not get the money from the bank. Where
Hmm.
if you create your own banking system by the cash value that growth within your policy, you control that. So you can get those dollars when you need them for whatever you need them for. And that's just such a key. That control component is so important. The guarantees, the guaranteed growth, the control, the protection over your family, and then you reap all of the benefits, the wealth, the growth, the uninterrupted compound growth. Why wouldn't you do it?
Yeah.
In case anybody is curious, Rob was the kind of guy that'll grab you by the collar. No, I'm kidding. You're like the most gentle, like mild-mannered, like kind
I should,
person.
that might be I'm too mild-mannered. I should be more like assertive when I'm talking to people
Yeah,
about it's because it's funny because I have like that. I'm sure you guys feel the same. We have this passion to share this thing that can change your life. And you're talking to someone and I have like this feeling of I want to just shake them and like wake them up inside me, but you just have to
yeah,
just have to smile and talk and then, light bulbs don't go off and you're like, well,
and that's okay. Yeah, we're
it's
not in the
okay.
convincing business. We're not dragging people in our process. If it makes
Right.
sense, and the light bulb goes off. Um,
That's,
then it's a very easy, natural step.
mhm.
But
That's,
real quick, if you've seen do you know who Key and Peele are? The
Yeah.
Yep.
comedian. They have a skit that's like an anger translator for Barack Obama, where he's like, very polished, speaker, and then in the back there's like this, gang member, or, like whatever the persona is, where he's just like saying it how it really is.
Yeah, that's
He's your,
hilarious.
like IBC anger translator.
It's kind of that remind me though, when we go to our annual think tank or we're around other, infinite bankers, people who have caught it. It's why it's kind of like such a family feeling because it's like you get it. And it's just like it's fun being around people that the light bulb has gone off and you get to see how it's been positively impacting their life and their finances and their family. And it's fun when you can be around like-minded people. So but it can be challenging when you're trying to like really explain something that it's hard for your head to get your head around. It really is. That's why Nelson says it's caught, not taught. But once it clicks, it's just it's like a life-changing moment.
Mm-hmm. Yeah, and we started this recording talking about the need to imagine, to play pretend, if you will. If you're one of our listeners, right? Like you may not be financing construction equipment, but you might be a dentist or a pharmacist or a surgeon or a farmer. If you've got equipment needs for your business, you have a need to finance that, you can use this, do this, practice infinite banking, and you will be better off. Your business will be better off. One thing that I like to think about is like this is Marcus's competitive advantage over his competition. The fact that he's retaining all the principal, the fact that the policy is growing above and beyond what he's put into it in the form of his profits initially, the fact that he's got protection against his life in case something terrible were to happen to him, either his business or his family are taken care of. Like this is a real competitive advantage over his competition. And just by changing who gets the dollars, by changing who he finances his business needs through. So really powerful stuff, guys.
Yep. Excellent. Yeah. Thanks, Derek, for presenting that.
You bet. Yeah. And if our listeners had any other questions and would like to get started with their own infinite banking or family banking system, reach out to us at thefamilybankingshow@gmail.com and we'd be happy to sit down with you. All right, guys, we will see you in the next episode.
Sounds good.
Thanks so much.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.